crypto, here's Bitcoin, 3 month on 3 month, just reflects these financial conditions and the economic surprises. So the economy is weaker, financial conditions were strong in the past, and Bitcoin has already priced in the entire thing. The good news is the financial conditions index, which is the dollar, rates, and oil, is rebounding like crazy. Strong conditions lay ahead. The economic surprises index is not finished going down yet. It will go down a bit further. Maybe the Fed will be able to cut in April. I've been saying this forever. This is the entire game. That's what they're trying to do. Economic surprises should be weaker. Then we're going to rebound, and the back end, the next part of the year is going to be very strong.
Bitcoin's recent price drop has raised concerns that the bull market may be ending. After months of gains, this sudden decline has left investors questioning if it's a brief correction or the start of a prolonged downtrend. Altcoins have been hit harder, with many seeing double-digit losses. Market sentiment is shifting to uncertainty, fueled by a strong US dollar and tightening financial conditions. Some traders warn that the Federal Reserve's slow rate cuts could pressure assets like Bitcoin, while others believe this signals the cycle's peak. However, macro analyst Raoul sees this pullback as a normal part of the cycle, not the end of the bull market. Drawing comparisons to 2017, he argues that Bitcoin has absorbed past financial conditions and is awaiting the next liquidity wave to drive prices higher. If the Federal Reserve eases policies, Bitcoin could experience a major recovery, surprising bearish investors. Pal shares his optimistic outlook in a recent video on his YouTube channel, Raoul, the Journeyman. If you enjoy this content, please like the video, subscribe to the channel, and turn on post notifications for more updates. Thank you for your support. Let's dive in.
I have been saying for a long time now, is the strength of the dollar, this is the dollar inverted in pink, the strength of the dollar after Trump got elected leads by 2 months the economy and financial conditions. As Trump was clearly going to start winning, the dollar started rallying. Oh my God, tariffs. Oh my God, whatever it was. And they started rallying the dollar, which is what happened in 2017. And what happens is it slows down global growth. The dollar is the most important input to all of global growth. And so the US Economic Surprises Index, the SESI, has been falling in line with this. Twitter, meanwhile, loses its collective shit and says, we're going into recession, it's terrible. Scott Bessent told us to. A, Scott was a Global Macro Investor subscriber for a long time. And B, it's not a fucking recession. It is a weak patch in data driven by financial conditions that tightened last quarter. If you look at it going forwards, on a forwards basis, it's been easing fast. So we will see the economy weak this quarter, and then it will start to strengthen from a weaker base. This is not a recession. Don't be ridiculous. This is what happened last time Trump got elected in 2017. Exactly the same reaction by financial markets and exactly the same outcome. Economic data weakened, the DXY had strengthened, then it began to weaken, and economic data followed it, and we got a big boom, and we will see very similar. The dollar drives things like the ISM survey, or this is the services PMI. Services PMI was weak. Everyone's like, we're going into recession. The services PMI is weak. We're all fucked. Really, all it's doing is following the dollar. And the dollar is leading and says it will bounce. So it will bounce. And then crypto. Here's Bitcoin, 3 month on 3 month. Just reflects these financial conditions and the economic surprises. So the economy is weaker, financial conditions were strong in the past, and Bitcoin has already priced in the entire thing. So the damage has been done. Okay, what's the good news in all of this? The good news is the financial conditions index, which is the dollar, rates, and oil, is rebounding like crazy. Strong conditions lay ahead. The economic surprises index is not finished going down yet. It will go down a bit further. Maybe the Fed will be able to cut in April or March. No, it's March now. April or May, whatever it is. Maybe they'll be able to sneak in a couple of cuts. If we see the Truflation index, inflation has been falling off a cliff. I think the Fed get cover to cut, which is what they want because they need to roll the debt. The Everything Code, if you haven't seen it, A, ask the Raoul bot about it. B, watch the videos on it. They need to get rates down so they can roll the debt at roughly around trend rate of GDP growth. So they need to get interest rates down to 3% or lower. Guess what? The Fed today, where do they think interest rates will be? 3%. Where do they think economic growth will be? Around 3%. I've been saying this forever. This is the entire game. That's what they're trying to do. Economic surprises should be weaker. Then we're going to rebound, and the back end, the next part of the year is going to be very strong. 2017, those of you remember, was an amazing year. And I think we'll see something very similar. Bitcoin priced in those financial conditions, which were leading by 3 months. Bitcoin's already priced it all in. So it's the worst news is in. My guess, probably up only. The chart you all care about that we came up with and every fucker in the world has copied. Global M2, 10-week lead versus Bitcoin. It's worked perfectly. I didn't expect it to be work as perfectly, but it is. But basically, we're turning the corner and we should start to see higher prices. And the higher prices will come quick, and the higher prices should take us all the way back to the highs pretty soon. Not soon like in a week or two, but soon like in a couple of months. So I think what you've all had to go through is a boring sideways consolidation pattern with a slight down bias. Your alts have been nuked, but nothing out of the ordinary. We saw this in 2017. We've seen it now, and we are very, very close to the turnaround. So patience is all I keep asking for. Stop being so dramatic. It's funny. It's actually boring. It's like you do not get 150% returns a year from an asset without drawdowns. You will have to get used to this. You have to stop worrying at this point in the cycle. We peaked in the cycle earlier in 2021, and we peaked because the business cycle had peaked. This time, the ISM is still low. And so we barely started the cycle. So I know we all say it's so early, nothing's really happened yet. It hasn't. We had phase one of the banana zone, which was the breakout of that consolidation range. This is the consolidation phase two. Then we'll get into the much more important banana zone phase two. It is all coming.
Raoul Pal has been discussing the second phase of the banana zone, a period known for rapid cryptocurrency growth, especially during altcoin season. Last year, he predicted this consolidation phase and advised investors to take profits to stay positive through the dip. Bitcoin still made a significant move from under $50,000 at the start of 2024 to over $100,000 by November. Now, Pal is forecasting another growth phase for Bitcoin and major altcoins like Ethereum, Solana, Cardano, XRP, Sui, and Dogecoin. Despite recession talks, Pal remains bullish, drawing parallels to the 2017 bull run. In 2017, Bitcoin faced 5 major corrections lasting 2 to 3 months before reaching new highs. Similar patterns are unfolding now, with altcoins experiencing up to 65% corrections. Pal emphasizes global liquidity, particularly the global M2 money supply, as a key driver of Bitcoin's price. If liquidity continues to rise, Bitcoin may see another substantial rally. Now, let's get back to the video for more insights.
Okay, let's go back and look at how this happened in 2017. Sorry, I'm speaking to you in a condescending voice right now. I don't know why. Just because I'm so bored of the online, like blah, blah, blah. Let me try and stop that. Let me readjust myself. I'm not trying to be condescending. I sound a bit of a dick, but okay. Can you hear that crunch? Fucking amazing. the 2017 cycle repeating. That's the dollar this time around, last time around. This time around, the dollar's even weaker, which is, I mean, it will bounce at some point. It will bounce for a month or two, and it will continue lower. But it's showing how fast financial conditions are weakening, even versus them. When we look at global M2 last time around versus global M2 today, it's the same bloody chart. I mean, it's stunning. It's stunning. And I think global M2 is going to actually outperform this time around, which should mean crypto has a good bid. Doesn't mean crypto will do as well as last time, because it was earlier phase. There was less participants, early phase in adoption, high performance, but I expect it to be good. Global M2 breaking out. These beautiful wedge patterns that happen every time you're in crypto spring and summer, and then crypto fall starts, you start breaking out, and then as it breaks out, the markets break out. We had that false thing in COVID, but the breakout in M2, higher. Breakout in M2, higher. Breakout in M2, higher. Get the picture? Higher. Bitcoin in the business cycle. This is what has helped me through my entire time I've invested in Bitcoin, is this log chart. I showed it all the way through in 2020, all the way through. It works beautifully. We are currently kind of like this 15, 16, 17 cycle. We're still kind of a little bit subdued, but in a beautiful uptrend. Bitcoin's done what, 600% from its low. And then what we will get is, as we hook into the next phase of the banana zone, we will start hooking higher into this. Now, I know many of you say it's diminishing returns, it won't do this. It'll be, I don't give a right now. Right now, just higher. We'll figure out the rest later. But right now, higher. ISM, the business cycle. The business cycle drives crypto. The business cycle implies Bitcoin implied pricing is low versus where the ISM is right now. But when we start looking at this is going to get interesting for you. These are not projections. You morons who want to come troll me on X and saying, you told me this and I demand my money back. I'm not interested in you. I'm trying to give you contextualization. If we get to the 1 standard deviation level by the end of 2025, we're about 210,000. If we get to 2 standard deviations, it's 400, and it's about 800,000 if we get to 2 standard deviations. Now, we've hit 2 standard deviations every other time. Will we hit it this time around? I doubt it, but it's possible, right? What's the probabilities? I don't know. The probability of 210,000, I would say, is like 70%. 412,000 is like 40, 35%. 800,000, I don't know, 20%, 15%. But that's kind of the rough idea. And again, these are not predictions, they're contextualization. But when we look at the ISM pricing, ISM we know is bottoming. It is just coming up from 50. And if you see the ISM in black here, it's cyclical. That's why it's called the business cycle. And it tends to get to somewhere between 55 and 60 something. So at this point, we've got Trump, tax cuts, we've got tariffs, we've got a confusing picture, but at worst, it should get to about 56. 57.6, well, that would put Bitcoin up here, and that would put the ISM, if we got a full cycle, it would put it at 63. So those go back here. So only to get an ISM of 57.6, which would be very subdued, it would give us 412,000. If we were to see an ISM hit, let's go back to this one, hit 63, which is not uncommon, we get to 800,000. Okay, so you can now see the strength of the business cycle drives it. The strength of the business cycle has been driven always by the financial conditions beforehand. So when we look at the financial conditions, policy, liquidity, leading indicators, it's already saying that the ISM should get to 56.2. Let's go back to this. 56.2, well, that was this one, roughly. That's saying, well, financial conditions alone tell us we should be getting Bitcoin over, let's say, 300,000. Okay, now, is that my prediction? No, it's not a prediction. It's like a contextualization of understanding of how this could play out. Bitcoin ISM. So you can see this, the ISM above 50, which is where we've just started here. That is when we get the acceleration phase, the banana zone. Where's my fucking banana zone? You guys are morons. You're like worried about the next 2 weeks when what we're talking about is the process over a year. So the banana zone, we started the banana zone. We're in the corrective part of the banana zone, the phase one correction. Then we go to the next bit. But this whole ISM above 50, a growing business cycle, is what drives it. Then when ISM peaks is when crypto prices peak. We are nowhere near peaking. So we barely started. So you all need to relax. Again, the ISM leads altcoin season. Altcoin season is never going to happen again. All of these pundits on Twitter, it's only because of the ETF. We're never going to see altcoin season again. It's all utter bullshit.
Another expert, Plan B, also disagrees with the idea of an impending bear market. In a recent post, he highlighted that Bitcoin's 200-week arithmetic and geometric means have remained close, signaling lower volatility and a steady uptrend. He suggests that if the current trend continues, Bitcoin could reach $160,000 by 2025, $320,000 by 2026, and $640,000 by 2027. While this could mean an early end to the 4-year cycle, it aligns with a more mature market structure. Plan B's analysis indicates that Bitcoin is in a sustainable growth phase, suggesting the bull market is far from over. Do you agree with his perspective? Share your thoughts in the comments below. If you found this video valuable, please like, subscribe, and turn on post notifications for more market analysis. Your support helps us grow. Thank you for watching.